Hello and welcome to another update video about Natgas. Yeah, has the Natgas structure changed at all since the last update? Not really, but we've seen a nice red candle. Nice red candle, always depends on the perspective if it's nice or not, but it certainly is in line with the presented wave count, and I'm going to talk about what we need to look for next. So the structure here, and I go to the 4-hour chart first. Structure still is basically unchanged. So we still have a situation in which a fourth wave likely topped end of October last year. We're now watching for a fifth wave to the downside to unfold. A fifth wave has 5 waves as per Elliott wave rules and also in this context. So what we can identify is a wave 1, which likely bottomed in December. Then a wave 2, a corrective rally, which likely topped in January. Then the third wave, which is typically the strongest wave in a cycle, could be unfolding still. By the way, we're likely dealing here with an ending diagonal in wave 5, which means that the subwaves are ABC structures. So also here we have a third wave which produced an AB structure. And now we're in the C wave, 1, 2, 3, 4, 5. I'd like to see one more low in my primary scenario. In the alternative, well, in the primary, I'd like to see one more low in wave 3, then a wave 4, then a wave 5. So basically 2 more lows as per the latest interpretation of the chart. In the alternative count, I'd like to see only one. So basically, it's either one more low or 2 more lows. And the difference between two charts is just how strong is the correction going to be, the corrective rally. Now, that's what I understand as correction, because the overall trend is down. So this downtrend is corrected by a bounce, basically, okay? And depending on how strong the bounce is, I expect one more low or 2 more lows. So the current decline should tell us more about Natgas's development over the coming weeks. Now, let's go to the 1-hour chart and explain why. So first of all, what I presented you with previously here was the resistance area. The resistance area for this wave 4 in the white count, which is the preferred count. And in this resistance area, we have 3 levels to watch. $1.77, which is typically a shallow wave 4, but the price reacted here already for the first time around the 21st of Feb. Then the 38.2 retracement, which is the ideal level for a wave 4. It's not a must that we get there. You know, it's very common for a fourth wave to reach it and then to react to it, which is what we've seen right now, which indicates, okay, possibly this is indeed the top of this fourth wave. And then the next move up is at $2, or the next level is at $2.10, which is the 50% retracement. So one of these levels should generate a reaction. It currently seems as if the 38.2 Fib level generated a reaction, and now we could be in circle wave 5 to the downside. So in the preferred scenario, I'd like to see it now come down, break below the B wave low at $1.58, then also below $1.52, and then possibly reach here the lower boundary line of the trend channel. In terms of targets, so what we can do for a third wave, we can calculate the target for wave C. That's going to give us a first clue where it might be landing, and it should be either the 1.786 extension or the 200% extension in this current scenario. Here we're dealing with $1.45 to $1.33. There's another way of measuring it, and that just depends on the 1-2 setup. Take the wave 1, go to the high of the wave 2, and then, so what levels do we have here? Very similar levels, right? Very similar levels, because the 1.618 extension was already reached in the third wave, very extended already. So the fifth wave, we're looking at 1 or 2 levels down from there. So round about 130 to 145, yeah, seems reasonable. Now that's the preferred scenario, but I gave you the levels that need to break to confirm that further. And I'm going to watch for that primarily as long as the last swing high here is holding and we're not breaking above that, because that's what we shouldn't do in this scenario. So at the moment the trend is down as it seems, and above $1.95 I would change my perspective. What would be that change in perspective? Well, if we now move down and it's forming only the B wave, which is an ABC structure itself. So if we see something like that, so if it's doing an ABC in wave B and it's a clearly corrective move down and we see a rally above the last swing high of 195, then I would expect, okay, yes, the initial resistance area generated a reaction, but we're likely already in the larger fourth wave and will not get another low here. So it might then rally here to the upper boundary line and then move down from there. So it's either, okay, we make one more low, then we start the larger 4, then the larger 5, or we're in the larger 4 already and we're doing this. Yeah, one more low. So in both, I don't have any evidence that the overall downtrend is already over. Don't have any evidence that the overall downtrend is over, so expect further downside. It obviously takes a bit of time. Wave 4s are typically boring, but at least this analysis gives you some parameters to watch. And as per Elliott wave, what we need to see to suggest that the downtrend is over, I mean, I can always be wrong, or the chart might just change its behavior. Well, when would that be the case? Well, it would likely be the case if we identify the first 5-wave move to the upside. This here is certainly a 3-wave move because we have an overlap there as well. And we need to see a break above the trend line for evidence, okay? At the moment, none of that is happening, so I'm still watching for downside as per the trend. Yeah, that's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, please feel free to join our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.